What's going on, everybody? Welcome back to the channel. I've been away for a couple of days, so let's go ahead and talk about the economy. Real quick, I'll just let you guys know my father is having surgery maybe tonight and maybe tomorrow. But that's the reason that I've been away from YouTube the last couple of days. I did make a Patreon video, though. It was kind of like an AMA. I did do an AMA on Instagram, and I'll be doing more AMAs on a weekly basis. So follow me on Instagram at Marlo Cremidas. Also follow my trading Instagram at millennial_trades. I'll probably do some AMAs on there as well. But I did post a longer version of the AMA on Patreon. So if you haven't checked that out yet, the link is in the description below. Thank you to those of you who have come over to support the content. And even if you don't make a monthly pledge, you can follow the page. Go and follow me on Patreon because I'll be posting things that I don't necessarily post here on YouTube. All right, but without further ado, let's go ahead and get into this because this is exciting. We've got a lot of interesting economic news, financial news. We do have fresh records for the NASDAQ and the S&P 500. With CPI, right, the inflation data that we got last week being at 5%, this is going to be good for tech and growth stocks, at least for the moment. Now, we do have a Fed policy meeting coming up later on this week, so we'll have to see what happens there, and I will talk about that a little bit. But I think the reason, we're seeing everything from Microsoft, Apple, Amazon, Facebook, all of these tech stocks were deep in positive territory today. And I think stocks that kind of got overshadowed, at least in the news, was like the fintech, right? PayPal and Square. Those are the stocks that I like to trade. That's kind of like my niche right now, trading the options on the fintech. And even those were deep in the green, deep in positive territory today. So for those people, holding these shares, congratulations, right? It's kind of been it's been frustrating because we've seen these stocks really pull back the last few weeks, last couple of months. I saw that GameStop was down another 5%, 4% or so. AMC was actually up at one point close to 20% today, and I do think it did recede a little bit. But just be careful of that, especially if you're trading, if you're day trading, swing trading. Pay attention to the meme stocks. I don't trade the meme stocks. I hate the meme stocks, really, but I have to pay attention to them because they can, mess up the entire market. They can really slow things down when you're trading, regular stocks. And so just use them as indicators. Like if you were to use the VIX or the dollar as an indicator, we'll use the meme stock sort of as a way to try to determine, what might be slowing down your trade if you run into any problems. And to those of you that are in AMC or GME, congratulations to everyone in that. Make sure you take profits, though, right? Take profits. Don't just, hold. For what, right? To stick it to the hedge funds. The hedge funds are trading these stocks too. So let's not fall for the false narratives, right? I want to hit oil for a moment because oil is still up. We have crude. Crude is actually over $71. We have Brent almost at $73 last time I checked. These are actually the highest level since October of 2018. So oil has definitely made quite a recovery. I mean, I remember when ExxonMobil was at like $31 a share back in October, right? That was the opportunity of a lifetime if you had the money to take advantage of it. So, with the travel restrictions being lifted, here in the United States, in California, also Europe, I believe, is starting to reopen as well. It's helping the demand for oil. It's improving the demand. You also have OPEC basically agreeing to keep their plan to gradually ease up on supply curbs through July. Right, they actually said by the end of June, I think, that there will be no surplus. So that'll be interesting to see how that affects the oil markets. And speaking of Europe as well, with the reopenings, right, European stocks are hitting fresh records as well. Canadian stocks were actually flat, but they did make gains in pre-market and earlier today, but then they receded. But we've got markets worldwide, at least in the Western world, that are at all-time highs right now. So, is this the time to start scaling into big positions? I'm not exactly sure, but that's sort of, it's in our human nature. When we see things going up, we're like, well, we got to get on it too, right? The FOMO, the fear of missing out. But just realize it's usually, it's usually, even though it kind of goes against our instinct, right? We should be buying when stocks are down. We should be buying things when they're in the red, not when they're at all-time highs. So just keep that in mind. I want to talk about some other commodities as well. Silver, gold, right? We've got silver at $27.85 last time I checked it. Gold pulled back to $18.65. Remember, we were at like $1,900 about a week ago. I might actually try to buy some gold soon, right? I need more gold for my stack. I only have a couple of pieces, and I've been making money in the market, so I've been pulling a lot of that profit out. Not a lot of it, but pulling what I can out to purchase silver. And I want to start adding to my gold stack as well, even if it's a fractional piece, right? Maybe a fourth of an ounce, or maybe a couple of tenth pieces. But the smaller amounts of gold that you buy, the higher the premium, right? If you're buying, just be aware of that, right? If you buy a tenth piece, like 1/10 an ounce of gold, you're going to be paying much higher per ounce than if you would just have saved up and purchased the entire ounce. So keep that in mind. So we have headlines right now like go all in on tech, right? Or go all in on the inflation trade. I saw this headline from CNBC. They had talked to a hedge fund manager, right? This guy, Paul Tudor Jones. I've actually never really heard of him before, but he's a big hedge fund manager, and he's going around telling CNBC, telling the financial media to go all in on the inflation trade. Now, what is the inflation trade? Well, he describes it as going all in on commodities, crypto, gold, right? I mean, this is literally what he told CNBC. And so Paul Tudor Jones from the Tudor Investment Corp, he says that the Fed meeting is going to be very important. This was actually a very good piece from CNBC. I thought it was cool because I like to listen to fellow commodity bulls, and this guy is definitely bullish on commodities. He's bullish on crypto and stuff too, but he's definitely bullish on gold, definitely bullish on silver, bullish on commodities in general. And it was an interesting interview. I think you guys should definitely check this out. Just look up inflation trade CNBC, or look up Paul Tudor Jones CNBC, and watch that interview. But the Fed meeting, he says, I think that's coming up on Wednesday or Thursday. He said it's going to be material, right? This was his quote. And he also talked about the inflation and the fact that inflation is probably not transitory. And he has several reasons why. I'll list those in a moment. In 2011, inflation had peaked at about 3%. Right, so you got to think about where we're at now and what the Fed is telling us, or at least what they have been saying. It'll be interesting to see what Jerome Powell, what the Fed says this week when we have CPI data from just last week being at, 4.9%, 5%. This is very high. I mean, especially compared to 2011, which was only 3%, is where we peaked out at. So we're also 2 or 3 points above the Fed's target of 2%. All right. But going back to Paul Tudor Jones, he actually asked the question, he posed sort of a rhetorical question, what happens when the Reddit crowd gets into commodities? I know they're trying to squeeze silver, physical silver. Is any of this really possible, these squeezes? I guess only time will tell. But I do sort of question that narrative, right? That the Reddit crowd is revolutionizing the way people trade and invest, and how these prices are moving. I question that narrative because I'm sort of under the suspicion that the Reddit crowd is actually being I guess you could say, manipulated by the hedge funds, right? If the hedge funds use the mainstream media to manipulate markets, to influence buying, influence selling, right, then why wouldn't they use online forums like Reddit? How do we know that these Reddit groups, Wall Street Bets, Wall Street Silver, how do we know that hedge funds or the sons and daughters of hedge funds managers are not running those chat rooms? Or we don't know. So I kind of question that every time I see that, when it's sort of being promoted as just retail investors, just the crowd, the democracy, right, getting together and forcing change. I really do question that narrative. I have my doubts, right? I have my doubts, but you guys let me know what you think in the comment section down below. Do you think this is a genuine retail movement that we've seen in GameStop, AMC, etc.? So the three main reasons to doubt inflation being transitory, quoted from Paul Tudor Jones. Number one, you have low inventory, right? Historically low inventory. Number two, you have very, very high demand. And number three, people are underinvested in places where they should be. I mean, this is probably hedge funds and retail that we're talking about here. So going back to the Fed meeting for a moment, this is going to be very important. I'm interested to see what they have to say about the inflation data. I'm interested to see maybe some of the questions that they're going to be asked, right? Because they keep talking about 2% transitory inflation, but our CPI index is up at 5%. What's it going to be next month? 6%? So, valuations for everything from interest rates to stocks, they're overvalued. They're at 100-year highs right now. So the Fed could sort of ease up. There's different things that the Fed could do. One thing they could do is at least talk about or maybe actually ease up on the bond purchasing program and some of the other, monetary stimulus policy that they have. And that could cause a negative reaction in the markets, right? Maybe some downward momentum. So we'll really have to pay attention to that and see how the Fed meeting plays out and see how the market reacts to it. But none of this can be predicted, right? Nobody knows exactly what's going to happen, even if they look like they know or seem like they do. Nobody really truly knows, except maybe the Fed and some of the big banks that can really influence the markets. So that'll be interesting. And again, seeing what they have to say about the 5% CPI data that we got last week. Maybe a typical portfolio right now that would be more towards the inflation, right? The inflation trade, 5% gold, 5% Bitcoin, 5% cash, and 5% other commodities, and then maybe start scaling in from there. Let's talk about Bitcoin, because Bitcoin actually popped up above 40K again for the first time in a few weeks. We have Ethereum at 2,500. Now, I'm still not convinced that cryptocurrency is, out of this sort of bearish mode. I do still think it's possible that we'll see some more down moves. I think it's possible we'll even dip as low as maybe 25 to 20,000 on Bitcoin. However, I could be wrong about that. Like, do not let my opinion, sway you from scaling into a position or whatever. I sort of backed off on it because I'm concerned, right? I mean, we were at all-time highs at 65,000. We've had a lot of trouble even getting above 40,000. And yeah, we're above 40,000 now. But, what happens when we hit another supply zone? Things are very, very uncertain. You got Elon Musk that can basically influence the entire cryptocurrency market based on his tweets. And I think the more he does this, the more he tweets, the less and less of an impact it will have, because people will probably realize that the market is much bigger than just one man. Hopefully people realize this but I mean, you have a lot of people that are hanging on to Elon Musk's every word. If Elon Musk tells them to buy, they're going to buy. If he says sell or says anything even remotely that could be, translated as bearish, people are going to sell. So we'll have to see what happens there. Let's talk about lumber. All right, lumber is a very important commodity because it's related to housing. Right, it's related to the housing starts data. We do have some of that coming out this week as well. And the housing market is a driver of inflation, but lumber prices are falling, and this could affect the housing starts information. It could affect the construction data that we get. This is from Zero Hedge. All right, lumber futures posted longest or largest weekly loss ever. Right, this is from Zero Hedge. They said lumber futures posted largest weekly loss ever. You have a decline in sawmill output. You also have buyers basically holding off because the prices are too damn high. I've literally seen pictures that people have posted. I think the Economic Ninja and also the Uneducated Economist. Guys posting these pictures of hardware stores, lumber yards, where, they're just stacked to the hilt. People are not buying lumber, and it's just sort of sitting there, right? And this could be interesting, too, because what happens if Lowe's or maybe Home Depot just slashes prices because they want to get rid of it, and in doing so, they try to take customers from, another store. So that's a possibility as well. Maybe more of a speculation, I should say. But you've got lumber just on Friday fell 5%. Right, the lumber futures they fell to about $1,000 per 1,000 board feet. I think is how that's measured. So huge drop. Right, when demand falls, price falls. This is a lesson. This is like trading 101, investing 101. Because the demand has fallen for lumber because of the prices being so high, the prices have to come down. And this is with anything. I don't care if it's the S&P. I don't care if it's gold. Whatever it is you're trading, whatever it is you're investing, supply zones, demand zones. That's why I think this is the best way to trade, because the only thing that moves the market is supply and demand. Bollinger Bands don't move the market. Moving averages don't move the market. The RSI, the MACD, none of that crap has any influence on price. So paying attention to, where supply and demand is, and maybe like volume, right? Price and volume. That's all. Those are the only two indicators that you need, if you're going to trade these markets, in my humble opinion. All right. From the Wall Street Journal, right? We've got some, a couple of things that are coming out next week, this week, right? I think, on Tuesday, tomorrow, we have retail sales are actually expected to decline, according to the Wall Street Journal. Auto sales have declined, right? They are down, and you have, basically fiscal support for Americans has faded. I know Biden's come out with this new budget idea, but I think that's kind of dead in the water right now. And there was nothing in there about stimulus checks, nothing in there about student loan forgiveness, right? A lot of these things that were promised. Some people think we're going to get a fourth stimulus check, so we'll have to see what happens there. But learn how to trade, make your own stimulus check. I made a stimulus check on Friday, and it's a wonderful thing if you can figure out how to do this. Also on Tuesday, we have industrial production, which is forecasted to rise in May. The Wall Street Journal also talks about Wednesday and some of the data coming out. We have Chinese industrial data coming out and Chinese retail data. So that'll be interesting to compare that to the American data. But also on Wednesday, the U.S. housing starts expected to rise, perhaps because of the falling prices in lumber. You have strong demand for new houses alongside rising cost. They also are having difficulty finding workers, right? Construction companies, housing construction companies, because people are getting unemployment, getting a lot of benefits, all that stimulus money, and you have home prices still surging. So like I said earlier, the housing market is a driver of inflation. So it's important to understand the housing market. market. Even if you're not in the market, I have no money to buy a house right now, at least, right? I cannot afford to buy a house. It's the furthest thing from my mind, but I still pay attention to the housing market because it's extremely important, and it's one of the main drivers of inflation, right? So is, the money printer, the expansion of the money supply, that also is a driver of inflation. But there's a lot of talk out here about, a housing crash, right? A big housing crash. A lot of people bearish on the housing market. Is that true? Or is the housing market actually looking pretty bullish right now? So some of this next series of points I'm going to make here come from a YouTube channel called Finding Value, right? Andy from Finding Value. And he did an excellent video, a very eye-opening video about the housing market. And, he makes the comparison between today's housing market conditions and the last housing bust. I don't know what it was, 2008, I guess, 2009. And the two conditions are very different. A lot of people compare this housing situation to the last housing crash, but it is very different. You have lending practices back then were very loose, right? They were giving loans basically to a lot of people that couldn't actually afford to pay these mortgages. And nowadays, that kind of, the lending practices are a lot tighter, right? They're a lot tighter. Also, credit scores were not as high back then. Now, the credit scores are much higher. Down payments as well are a lot higher. And Andy from Finding Value, covers all of this in detail. He has charts to prove all of this. Talking about the forbearance, there is a lot of talk about people getting kicked out of their homes, people foreclosing. But right now, what's expected in 2021 is only about 200,000 defaults, which is really, that's kind of like nothing. And so, you have to take all of that into consideration when you're listening to these people calling for a housing market crash. Let's talk about equity, right? The equity in a house is the difference between the market value and the amount that is owed on the mortgage. And so, owners right now, they have very large equity compared to 2008, compared to the last housing bust. So that's going to incentivize, right? If the homeowners have more equity, it's going to incentivize them not to foreclose. In the third quarter of 2020, the average, homeowners had about 194,000 in equity. All right, so much different landscape, much different situation, financial situation, for Americans than back in 2008, at least Americans that, own homes. And in 2009, you had 1/4 of all the homes valued were actually less than the amount the owners owed on the mortgage, right? So back then, this is why we saw all those foreclosures, because no equity equals foreclosure equals a housing market crash. Let's take it back to lumber, right? You have depleted, supplies, which also forces real estate higher. And, you have projected growth between about 3% and 8% for, the housing market. If inventory for houses and lumber, really does increase, then perhaps maybe a dip, maybe a crash. But it's looking like a lot of that very bearish talk about the housing market. A lot of these people may not be considering all these other factors and sort of comparing, the data from presently to the last housing crash. So that's what I'm looking at. That's what I'm seeing. Obviously, I'm trading. I'm taking pretty much one trade every single day. I'm trading fintech specifically. It's either PayPal or Square for me personally. A lot of people ask me, why do you only trade like one name or two names? Well, because I can become familiar with these names. I can become intimately familiar with how their price moves, and you really start to feel comfortable trading these stocks. The other thing is that, these two names, they can move sometimes $10 within a day. So if you're trading options and you have like 10 option contracts and you're on the right side of the move, I mean, you can easily make $200, $300, $400, $500. on Friday, I made $1,800 on one trade. Well, that was actually a swing trade. It was supposed to be a day trade, but I ended up holding overnight. I had good reason to. But I woke up the next morning and, I was up $1,800. So my account, almost doubled right there. And so, it's been great. I've been making withdrawals, and, I'd like to talk more about that and, share with you guys what it is that I'm doing. But that's what I'm looking at. That's what I'm going to be considering this week, going into my daily trading routine. Let me know what you're looking at. Let me know where are you putting your money. What are you bullish on? What are you bearish on? I would love to hear back from you guys in the comment section. Like I said in the beginning of the video, come and check out Patreon. The link is down below. Come and support us over there. We will be posting exclusive content, but we'll also be posting public content. So even if you don't make a monthly pledge, just go and follow the Patreon page so you have another place where you can catch up. And I hope you guys enjoyed the rest of your weekends. Prayers for my father are much appreciated while he goes into surgery, perhaps tonight, actually. And with that, I hope you guys enjoy the rest of your evening. Thank you so much for spending some of it with me over here. And as always, until next time, God bless.